Hundreds of investors have gathered in Kampala to network as well as identify business opportunities for growth in the country. Keynote speaker, former Finance Minister Honorable Maria Chwanuka, has emphasized the need for the private sector to cooperate with the government in creating investments that sustain national development.
Where does Uganda's natural advantage lie compared to East Africa? Because many investors outside, when they see us, they think of Africa as one country, or at the best, East Africa. We need to show Uganda. What is Uganda good at? I'd like you to think about that, and then I'll come back to that at the end of my hopefully short speech, and we can take it from there. We're also aware that additional traditional official overseas development assistance markets are shrinking. The bilaterals we used to know in the Western world, agencies like the World Bank, ADB, they're all shrinking or not growing as fast as the new financer, who is the private sector financial community, whether it's external or internal.
In the face of rising interest rates, a slowdown of China's economy, rising unemployment, volatility in oil price challenges that worry investors, the seasoned economist said focus must be on value creation and market expansion to ensure equitable growth. Among the key areas for investment, she noted, are energy, tourism, transport, and agriculture.
We can't find plumbers, we can't even find IT specialists. And those of you in business are very much aware of that shortage. So it's up to you to bring that shortage to government's attention, for us to realign the education criteria to fit the needs of Uganda.
Concerns raised by stakeholders to government are the plight of artisans, who are the drivers of innovation, unplanned urbanization, high cost of borrowing, information and technology, the fate of the entertainment industry, and the lack of business administration skills amongst many entrepreneurs.
We take graduates who have not worked at all in the past 1 year or so, and link them with the SMEs, which are looking for the skills this graduate has. The graduate must be able to accept that this is voluntary, because he's going to learn the real workplace practices.
Majority of Ugandans are unemployed, and thousands of graduates are passed out annually without the hope of finding a job. The target set so far by the government is to create 1 million jobs. Mr. Sebowa is optimistic that the goal can be achieved.
Because if you look at our past achievement, it is not that rosy. Setting 1 million jobs is actually stretching a bit. So for now, we think it's 1 million jobs. If halfway, like 3 years from now, if we find we've achieved 1 million jobs, don't imagine we'll go home. We'll continue pushing and pushing to get even more.
Statistics from the Uganda Bureau of Statistics show that Uganda's economic growth rate stands at 4.6%. That's in the financial year 2015-2016, down from the 5% growth rate that was registered in the financial year 2014-2015. The regression in gross domestic product is attributed to economic volatilities such as the depreciation of the shilling, which slowed down investments. So how is the Uganda Investment Authority prepared for this setback?
There are those that need linkages, because we find that there are people who have progressed a little bit. They are already in manufacturing, but they need to be linked to the multinationals or to bigger companies so that they can access markets beyond their immediate boundaries. That is being done by UAE. We also do clustering, because you need to mobilize volumes. So you get a few entrepreneurs who are together, you cluster them, they produce collectively, and then they can mobilize volumes. We have formed clusters in many places, and a cluster is linked to a buyer, which is working well.
In celebrating 25 years of existence, Uganda Investment Authority prides itself as the investment promotion agency for the country and its vision to make Uganda the preferred destination in Africa. Over the years, there has been numerous business success stories, among them Chagulanyi Coffee, the National Information Technology Authority, and the Rural Electrification Agency.
One of my difficult sells to the investors, to the board in Europe, who eventually gave us $15 million to put into new infrastructure in Uganda in the last 3 years, was to convince them that coffee production would increase. In the early 60s, Uganda was producing 2.6 million bags of coffee. That average figure, it lifted to about 2.7, held true for a couple of decades. What does that mean? It means we were consistent, but we had no growth in productivity.
The long bureaucratic internal processes across agencies. You go to different agencies to apply for these licenses or these permits for you to be able to start your businesses. Submission of numerous forms containing the duplicate information. You go to URSB, they ask you for the same information. You go to URA to get a TIN, they ask the same information, and so on and so forth.
Electricity Regulatory Authority is, of course, still a young institution, so there are so many challenges they sometimes face on how do they set the tariff, because for the private sector, if they are to invest in Uganda or in the electricity industry, the most important thing is the tariff, because that's what makes or pays back the investment. So there are issues there. I know with time, of course, they will be sorted out.
As part of activities to crown the annual Uganda Investment Week, a host of businesses had to exhibit their products in a bid to attract publicity and perhaps show how they are aligned to the national agenda of value addition and export.